What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode I'm doing another stock market technical analysis update. Just a heads up, there will be no video update for tomorrow, and there may not be a video on Monday. The Monday video depends on if I'm able to get a video out in time, and if a video does come out on Monday, it will probably be much later than you're used to. Now, before we get into these charts, you know what you gotta do. Go ahead and smash that like button and subscribe to my channel to follow along with all of my updates. First up, we have the ticker symbol SPY, which is our SP 500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right, so we see today that the SP 500 ETF closed up about 0.25% today after gapping down and touching the bottom of the Bollinger Band intraday. So this is fully in line with a technical bounce, and we expect to see bounces on the way down because we don't expect to see the stock market just crash down in a straight line. So remember, on the way down, we're expecting to see these types of bounces as we continue to head down towards our $315 price target, which is our 1x Fibonacci of the wave A that brought us down in the initial correction. Now you can see with today's price action, we did come back up and touch the 5 EMA, and ultimately we did find resistance back at the 5 EMA, which is still very bearish price action. We're still seeing the bears attack the price to the downward side every time we hit these resistance levels, and the price action is still being suppressed below the 5 EMA, which is a very bearish sign, and we still see that 5 EMA going negative, closing yet again below the 50 EMA. Now you can also see that the price action went back into that 0.618 Fibonacci retracement level at $325, and that was also a resistance level that we saw SPY get rejected at. So it still looks like we're going to see these $315 price levels on SPY, and if we continue to break down below the $315 level, look out for the 305 level on SPY, which is the 0.382 Fibonacci retracement of the bull market. Now let's jump over to a 1 hour chart, and we can see today that we did form yet again another lower high, and as you know, lower highs are bearish. Now we do have somewhat of a lower low, but we don't have a closing price on the 1 hour chart with a lower low yet, so it's still too soon to say if we're going to see that lower low. We did have this support level down here at 322, and we did somewhat go below that level at the open, but we did close above it to close out the 1 hour gap. So there's still no gap at that price level at 322, and we're still trading above that level, which is a support level. So what I would watch for tomorrow on the SPY ETF is look for the price action to potentially bounce off this level and see if we can start to form higher highs and higher lows to maybe reverse this bearish pattern. However, I'm fully expecting this support level to break down, and I'm more expecting to see a lower low and a lower high as we continue down towards that $315 level. All of the price action and all of the technicals are still telling us to expect this bearish price action, and until we see a reversal in the bearish trend, we got to give benefit of the doubt to the trend because we follow the trend on this channel, and the trend is our friend. So going back to a daily chart, we can see here that we have this resistance trend line. In any event that we do come back up to that resistance trend line, we're going to watch for a rejection at that level as we continue to downward trend. Now tomorrow's price action at that resistance trend line matches right up with our $331 level. So we could still come all the way back up to $331 and still have that bearish downward trend with lower highs and lower lows. So remember, we don't want to try to call that bottom, and right now closing below the 5 EMA as well as closing below the 50 EMA, and we still have that bearish trend with that 20 simple moving average negative. We don't want to try to call that bottom, and we don't want to jump in too soon. Let's wait for that price action and wait for that trend reversal to know when we want to become bullish on this market again. You can also see with today's close that that 13 EMA is about to cross below the 50 EMA, which is more bad news for the bulls and more good news for the bears. This bearish trend is still picking up momentum, and we see that with the 20 simple moving average sloping more and more negative, starting to head to the downside very quickly. We also see with today's close on SPY closing up about 0.25%, that was also on lower volume. So it wasn't like we saw a bunch of buyers and big money coming into the market today. It was strictly just a technical bounce, and it's really just an opportunity for the bears to let the bulls get a small win so that they can reset some of these oscillators and continue to drive the market lower. So remember, the bears are going to short into resistance, and right now we're still seeing evidence of that with the bears coming in and shorting the SPY down as soon as it hit the 5 EMA. So right now that 5 EMA is still resistance, and even if we do break back above the 5, we still have resistance levels we have to break at the 50 EMA as well as the 13 EMA. And even if we get all the way up to the 20 simple moving average, we still have another resistance levels for the bears to short into, which would even form another lower high. So even if the 20 simple moving average comes out here and we bounce all the way up here and still get rejected, that is still another lower high on this market, and the bears will still be in control. So it's very important to be patient and remain disciplined in a market like this, and bear markets with high volatility are the true test of a disciplined trader. Traders that are too impatient to wait for the right opportunity are going to get destroyed by a market like this, and the volatility is going to cause a lot of weak hands to sell for losses just to see that that position would have been a profit if they had held it for a little bit longer. So as traders, you need to be disciplined, and you need to know your support levels, and you need to know your entries and exits. And if you're not sure what your exits are, then you should not be entering a trade position. So overall, the price action and the trend on the SPY ETF are still bearish, and we're looking for this $315 target level next. In any event we break down below that, look out below for the 305 level. Next up is the Nasdaq 100, and we're looking at the QQQ ETF, or the triple Qs, and we see the Nasdaq 100 closing up almost 0.5% today. We also see the Nasdaq 100 coming up and getting rejected around the 5 EMA, which is still bearish price action, and we still have that bearish trend with the 5 EMA trading below the 13 EMA. The price action on the Nasdaq is also trading below the 50 EMA, and we still see that 20 simple moving average heading down negative, which is telling us that the bear momentum is picking up and the bears are still in full control of this market. Now on the Nasdaq 100, we do have to go over to the 1 hour chart and see that we did bounce off the support level at 261. However, we did form another lower high. So overall, the price action is still bearish, and we need to watch for any evidence that we see a reversal if we do get that higher high situation where the market could come up, break back above 272 on the Nasdaq 100. That would be our first sign that the Nasdaq 100 potentially found a bottom and the correction could be over. But right now we're not seeing that, and the bears are still in full control. And going back to the daily chart, we still see we have the 0.618 Fibonacci level at 259 that we have yet to test as support. So on the Nasdaq 100 triple Qs, watch out for the $259 level, and if we break down below that, the next level is here at the 0.382 Fibonacci retracement of the bull market at $250. Keep in mind that as we're heading down, it's completely normal to see these bounces. Nothing goes down in a straight line, and you're going to see a lot of bull traps and bear traps where the price action goes above and below support and resistance levels, trying to trap the bears and trap the bulls alike. In a market that is this volatile, rookie traders on both sides of the market are losing. There's bears that are shorting that are getting stopped out, and there's bulls that are going long that are getting stopped out. And that's why you really need to understand your entries and exits in a market like this, because you don't want to get caught on the wrong side of a trade for a quick loss. If you don't know what you're doing, you're best off just to be patient, and let's wait for the price action in the technicals to tell us that this bearish trend is reversed, and then we could go back to being long on this market. Next up is the Dow Jones, and we're looking at the DIA ETF. And if you look at this, the Dow Jones came all the way down to our gap level right here at the top of the gap at 265 and bounced higher to close the day up about 0.2%. Now we also see the Dow Jones finding resistance right around that 5 EMA, which is another bearish sign. And we see that 5 EMA very negatively sloping down, looking very bearish, crossing below that 50 EMA. We see the 13 EMA getting ready to cross below the 50, and all of these are still very bearish signs that the bearish trend is picking up momentum. And we still see that we have this gap down here at $264. So still remember, this $266 to $264 is fully where we expect to see the DIA Dow Jones ETF come down and close these gaps in these price actions. And then in any event we get here and we see a bounce, we'll start looking for that trend reversal and potential higher highs and higher lows. But right now there's still more downside, and we still have to respect the fact that the trend is very bearish on the Dow Jones. Next up is the VIX, which is our fear indicator, and we do see the VIX pretty much going nowhere today, looking awfully flat. Now we did see volatility in the VIX, and we did get as high as 30, which is showing us that there's still fear in this market, and the VIX is still showing that bullish trend with that 5 EMA breaking back above all the moving averages and starting to break away and create separation. The VIX is still closing above the 20 simple moving average, and we see a nice bullish trend on that 20 simple moving average with this nice positive slope. So it could be any day we could see the VIX spike all the way into the mid 30s, and when we see the VIX get into the mid 30s, we're going to expect to see an increase in volatility with those -4 to 5% days. So don't be too impatient, and don't be ready to jump into this market just yet, because there's still a lot more potential downside, and the VIX is telling us that there's still going to be a lot more volatility. So expect those swings to the upside and the downside, but overall remember that the trend is still down and we are still bearish on the stock market right now. Next up is the sectors driving this market, and the first up is the financials, and we see financials really doing absolutely nothing today, still trading well below the Bollinger Band and having that very bearish price action with the 5 EMA heading very negative. Now the 13 EMA has crossed below the 50 EMA, and that 20 simple moving average is now crossing negative, getting ready to head back down towards the 50 as well. So the financial sector is looking very bearish, and the financial sector being bearish makes us very bearish, because the stock market market is not going anywhere while the financial sector is struggling and in a bear market. So there's still no good news on the financial sector, and overall it's still looking very bearish with very bearish price action and trending. Next up is the industrials, and we see industrials really going nowhere today, closing yet again below that 50 EMA and finding resistance at the 5 EMA. So we see more bearish price action and more bearish trending going on in the industrials, and we still have this gap down here at $72 where we could potentially see a bounce in any event that we get down there at that level. Next up is healthcare, and we see healthcare continuing to trend down. Still looks like it's in that ABC correction. On the greater scheme of things, this could still be that correction to that larger bull rally, but we're not making any guesses, and we're going to watch the price action and watch the trend for any reversal in the healthcare sector. But right now, still very bearish and still trending downward. Next up is the US dollar, and we're looking at DXY, and we see that the dollar really just took a day to cool off today. It was trading above the upper Bollinger Band, and it's still trading right at the top of the Bollinger Band today. But we do see confirmation of the bull trend with that 5 EMA crossing above the 50 EMA, and we see that that 50 EMA has gone from negative to more of a flat trend, and it could be ready to start heading up for a positive trend. So overall, the dollar is still looking very bullish, and we do have our support trend line. In any event the dollar does start pulling back, we could find support here at the 50, and we could also find support here at the support trend line and still remain in that bullish trend. So right now, if the dollar continues to strengthen, we're going to expect the stock market to continue to correct. So we need to be very aware that right now the trends in the stock market are bearish and the trend in the dollar is bullish, which by definition makes us even more bearish on the stock market, because the dollar strengthening would expect us to believe that the stock market will continue to go through that correction. So who knows where the bottom is? I don't have a crystal ball, but we do have the ability to follow the price action and follow the trends to know where that smart money is entering their positions. So next up, let's take a quick look at gold, and we do see gold really just taking a second to cool off from its heavy downtrend, and we're still expecting to see gold come down into this next support level at $1,800. So right now, I'm not a buyer of gold, and maybe when gold gets down here to the 1800s, we'll consider being a buyer of gold. But right now, with the dollar strengthening, we don't want to buy gold, and we want to be patient and see if it could get down to that next support level before we ultimately start stepping in and buying it up. Next up is Apple, which is our market moving stock, and we see Apple finding resistance at its 50 EMA today and closing below the 5 EMA as well as the 50 yet again. So overall, still bearish price action and bearish trending going on Apple, and we still have this large gap below which we fully expect to get closed. So be patient on Apple, and we're still looking for Apple to come down to 96 before ultimately seeing if we're going to get that bounce and that reversal. Keep in mind, September is that correction month, and if you look at this chart, this vertical line is the end of September, and we're only a few days away from knowing how far we're going to go to see the bottom of this potential correction. If this correction continues on and we continue to head down, we'll be protected because we're not jumping in and we're not trying to guess the bottom. So right now, we do think the bottom of Apple will be 96, but let's wait to see that bounce and that trend reversal before we ultimately decide. Next up is Tesla, our FOMO stock, and we saw Tesla going up about 2% today and holding up right at that 50 EMA. So that 50 EMA is a great support level for Tesla. But if we do break down below that 50 EMA and get a close down around these levels of 355 or lower, we could see Tesla go all the way back into the high 280s. So it could still be that Tesla's in this ABC correction before it resumes that bull trend, but it's too soon to say, and we are still seeing that 5 EMA cross back below that 13 EMA, which tells us that the bearish trend is picking up momentum. So if on Tesla we see that price action close back below the 50 in this bearish trend picking up momentum, that could mean bad news for the Tesla, and we could see retail investors running for the door, driving the stock much lower than you would anticipate. Next up is Bitcoin, and we see Bitcoin coming right back into our support level at 10,200 and finding a bounce. And if we can get a close back above the 20 simple moving average and come up here and take out this high at $11,000, we could see Bitcoin go back into that bullish trend. So right now it's looking good for Bitcoin, holding up at support, and let's see if it can go back and form a new higher high before we ultimately decide if we want to be a buyer of Bitcoin. So going back to the SP 500 SPY ETF, remember we are below our Fibonacci level of 0.618, which is bearish because our next level down below is still at a $315 level, which we have yet to test as support. I still fully expect SPY to get down to 315, so be patient. And if we do see a trend reversal before we get there, at least we'll know it's time to enter the market and go long. But right now, the price action is bearish and the trend is bearish. Therefore, we are bearish. If you go back to the $315 level, it brings us right back to this island reversal gap, which could be a significant area of support, and we could see the end of this correction very soon. However, that's all speculation, and as you know on this channel, we follow the technicals and we follow the trends. And right now, we just know that we're trending down towards that level, so we want to keep that level in our sights. So thanks for watching, everybody. Please remember to smash that like button to help me out. I really hope these videos are helping you out. And if you're new to the channel and want to follow along with my updates, don't forget to subscribe to the channel. Thanks for watching, everybody. And as always, I will see you in the next episode.